My name is Peter Renton. I am a co-founder and chairman of Lended FinTech. We're the world's largest conference series dedicated to lending and digital banking. It's my pleasure today to be chatting with Commissioner Gill. So why don't you just get started, introduce yourself, and tell us, what's your role at DBO?
Sure. Hi, my name is Ed Gill. I was appointed to the Senior Deputy Commissioner role in 2015 by Governor Brown, retained by the Newsom administration, and as of today, I oversee the program areas at the DBO. So pretty much all of our licensees and exam facilities kind of run through me at this point in time. So I'm here to hopefully chat with you guys in regards to some of your thoughts. Some of your questions will be answered today, some won't. I had a long speech that was written for me to deliver today, but that may stand between you and lunch. So we're gonna focus on just trying to answer your questions. I think a lot of good points were brought up in the last panel. I heard there were some other good points brought up throughout the day. So again, we're hoping to add some clarity to some of the questions that you have and some of the thoughts that you have, and hopefully move forward from there. But I really want to thank Eileen for setting the tone for the expectations. This is a 3-year process that is expected and not an overnight fix. But with that being said, back to you, Peter.
Okay, well, maybe let's just get right into it. And we just heard several perspectives on that last panel. I'd love to get your perspective of, the reasoning behind setting up this new approach. I'm trying to get the name right. The Department of Financial Protection and Innovation, DFPI. I'll memorize that. But so what's your perspective on the reasoning behind this, and how? And maybe you could even talk, like there was talking about, keeping innovation in the name, how important that was. And
Sure.
Just maybe give your perspective.
Sure. From my perspective, I think I have to give you a little bit of my background. I spent 25 years as a commercial corporate banker for a lot of large institutions here in California and the United States. In 2015, when I made the transition to come over from a commercial corporate banker to a regulator, a lot of things opened up for me in terms of just how things were being looked at, review of the law. I think I heard today that there were some questions on the CFL law. Quite honestly, I've questioned that law since I've come on board. But with that being said, evolution and change was a constant in the banking industry, and we're seeing that now and here from a regulator standpoint as well. I often tell people the story. When I started my career as a banker, there were limitations on what we could do, who we could lend to. For example, we couldn't lend to Native American gaming tribes. We couldn't lend to churches and things of that nature. When I left my career as a banker in 2015, I had the largest gaming portfolio in the country. So when you think about the evolution of change, it's not just at the banking industry, it's also in financial services as a whole. Part of my background, when I was a banker, I was there when I saw the void of capital to that small to low to moderate income community. There was a big void as the banks pulled out of that. And as you all know, I think that's where, kind of a wild, wild west approach came into effect. A lot of lenders stepped into that space. Not a lot of clear regulation behind it at the time. And as a result, you see the effects of predatory lending. So with this change, or with this proposed or opportunity that we're looking at, I think when the commissioner came on board, he came from that mindset of the CFPB, that how can we be an effective agency that provides consumer protection, and at the same time, look at the fact that we are in California. California's main provider of jobs is small business, and a lot of our licensees are small business people who provide jobs and opportunities for consumers in California. So as a result, how do we get to a viable agency that can service all of those needs? Here we are. Innovation and change. I think the innovation piece, like I said, it goes without question that the financial market is constantly changing. And if you're not changing your products or creating new products to deliver to consumers in a timely manner, you may not be in business that long. Mm-hmm. We'll put it like that. With that being said, there are responsible ways to lend. And I think that's where the financial protection piece is at and why it's listed first. Financial protection, basically the bloodline of what the DBO should be. Financial protection and an avenue for licensees to get their products to the marketplace. So I think that's how I see it. To be honest with you, Peter, I think it's a necessary change, and I think it has to be done in the confines of the law. One of the things that we've been cognizant of at the DBO from the time I arrived in 2015 is getting in a position of creating what's called an underground reg. The DBO is not interested in making up things as we go along. I think we are. And a lot of you in the room have had an opportunity to come in and speak with the commissioner and his team and talk about products, talk about the need for clarity on some of those products. The open door policy is going to remain. It's been that way since I've been there, and it's been a very productive way of doing business. Mm-hmm. So.
Yeah, and given that Commissioner Alvarez is well known, obviously, to people in this space before he became commissioner from his time working at a firm. I'd love to sort of get your perspective on this, on the Office of Innovation that's supposed to be set up here in San Francisco, and given the fact you talked a lot about consumer protection there, and a lot of people in this room, while very cognizant of that, are also trying to create new products, trying to use, we heard earlier about different types of data to make their own products more efficient and expand availability of those products. So maybe just talk a little bit about that Office of Innovation and how you envision that operating.
Sure. Well, obviously, I think the proximity to the Silicon Valley and San Francisco marketplace from an innovation standpoint kind of speaks for itself. The simple matter of it may be that we have more space in our San Francisco office than we do anywhere else in the state. No, I'm just joking about that. I think the reality of it is, due to the proximity of the Silicon Valley, the Bay Area, technology here, it's important that we in California recognize that those businesses are here, and they could leave. And I don't think anyone in this administration or at the department is interested in seeing those businesses go away. We think that there should be a viable way for us to find a working platform for those innovative businesses to remain here in California, and for us with the creation of the new department to kind of provide that platform to do so. But the reality of it is, we just think this is the hotbed of where that financial technology is kind of breeding itself.
Oh yeah, I mean that's objective fact. I think there's more innovation happening within 50 miles of where we're sitting here than probably anywhere else in the country. Exactly. in this space. So I want to open up for questions. I mean, I feel like we've got the commissioner here, and I've got a list of questions. But if you want to jump in right away, you can do that. But if not, we can come back in just a minute. Okay, so. I want to talk about enforcement. There was quite a bit of discussion on that last panel, and we had Chris Peterson over here who giving the sort of the flag of consumer protection as a critical piece. But so how do you kind of balance? How do you think about enforcement and still encouraging innovation? Because talked about the fact that some companies might be hesitant to really go to the regulator with a new idea. So just tell us about that.
Yeah, I think historically, because of the open door policy, we've had a number of licensees that will approach us, ask for meetings. We entertain those meetings. We talk about their products. However, the way the law is written, there's not a lot of clarity in regards to how those new products fit into the law. So as a result, it just becomes a conversation. And in some cases, when it comes to enforcement, where are the teeth? Not always there. Mm-hmm. So I think this process will create the teeth. We can still have opportunities to meet. The commissioner's made it very clear he wants to keep that open door policy. We think that by having this fintech or the innovation office here in the San Francisco Bay Area, we can kind of shepherd a lot of those ideas, those thoughts, those processes through that office so that we can start the process of figuring out how does this fit within the framework of the laws that we have right now, and for everyone else to continue to do their business. We have a staff of over 700 people, of which probably 500 or so are examiners. So these people are in the field. But oftentimes we end up calling them in for their input, or at supervisory levels, their input as to how is the law being interpreted on the streets? How are we handling this law in our exam process? And so as a result, by centralizing that thought process in one area, elevating that position as a direct report of the commissioner so that he's in line on a regular basis to that communication and that thought process, we think it's going to be an efficient and effective way for us to determine how these new products can be treated from an oversight perspective.
Mm-hmm. Okay. And so I want to just touch on like just more general work. I mean, the Office of Innovation that you and the sort of the retooling of DBO is still in the future. It hasn't even been approved yet. So maybe we could talk about today. What is the DBO doing right now that really is, supporting innovation in financial services?
Peter, it's not a tough question. I think at the end of the day, we look at it as we need to have communication. There needs to be communication in the process because as some of these new innovative products come online, we're scrambling to figure out how do they fit within the framework of the laws so that we understand what our enforcement powers are and how we will handle that from a review or an exam standpoint. By not having that specified, it creates that kind of cloud, an area where there's uncertainty. It creates uncertainty for the existing licensees that may be competing in that space that are licensed and examined and assessed from the DBO. It creates uncertainty with the consumers that are out there. Is this a product that I can have confidence and safety feelings about pursuing? That's the gray area. We're trying to close that loop right now with this. And I think until this is done, the way it's being handled is almost like a case-by-case situation as those products hit. And the commissioner's made it very clear he doesn't want to operate in a one-off type of situation. We want to have clarity across the board for our licensees. So that's what we're working to achieve.
Right. So then I'm curious about you mentioned yourself like these, lots of the fintech companies are based here in California. And there's been talk, obviously, about migration away from here. Do you see it as part of sort of the DBO's purview is to try and, you don't want to discourage people who've got a new idea. People want to come here because this is where all the creative people are, or not all, but many of the creative people are, engineers and product designers and that sort of thing. Like how cognizant are you that, whilst California has this incredible advantage today, there's no guarantee that advantage is going to sort of persist in perpetuity.
True. I think there's almost a feeling of obligation that the state of California has to play an active role here in retaining those opportunities in California. You've got the largest population by state. You've got the largest population of licensees in the state of California. It's almost an expectation that we should have a regulatory scheme to support those licensees so that they can do business in the state. How we advocate for that, not openly. As a regulator and seeing yourself as a third party in the transaction, I think there's a fine line in regards to how you advocate for certain types of opportunities and how you advocate against. And we try and walk that line. When we see products and services that are beneficial to consumers, we try and weigh in. But at the end of the day, I think a lot of those decisions are made over at the Capitol in regards to what's going to be law and what's not going to work here in the state of California. And we then try and support that through interpretation of this is what it's meant to be and act accordingly.
So, given that there's obviously a lot of people here in the lending space, and many that are focused on not just the prime but the lower and middle income community. I mean, how do you feel about the? How can fintechs working with banks, which has really been the way this industry has evolved. How can we do more? You think how can we do more to sort of serve these lower and middle income consumers who still have predatory products out there?
Sure. As I mentioned earlier, my background is banking, and to have been in the industry where I saw the plight away from that market by the commercial banks and national banks was, obviously a concern in those communities. And I think the fact that that void was filled created a lot of opportunities for the folks in this room. But the responsible lending piece is where I think we can help. The predatory lending and things of that nature. I often hear and meet with licensees that have great products, great intent to be a responsible lender, create creative underwriting that will support credit scores of their borrowers. And those are all great things to hear and great things to see from an industry perspective. But I think we all know that there are members in that community that kind of abuse the rates.
Yeah.
And I think controlling that and addressing that as an industry and as a partner within that framework of the industry as a regulator will be the key to how this kind of turns out, I think, at the end of the day, with this new innovation in financial protection for consumers. I mean, we just can't afford to have the predatory lending out there. It's a huge black eye to the industry, and which is why I think we've seen a rush to create new products, new entrants into the market that want to be in the market, that want to lend responsibly. And we have a lot of those within our portfolio right now, but we also have some of those lenders that have abused the process.
Right. Now, I've said many times, I think that the true promise of fintech is, while it's nice to serve the already served, it's to be able to serve better, to use the technology and data that's out there in a responsible way to actually to spread the wealth, to be able to bring more people into the financial system. I feel like I'm very personally passionate about this, and I think this is. I feel as an industry we will have failed if we're not making a dent in really moving the needle for the underserved. That's my perspective.
I think one of the other questions that was brought up by the last panel and can be helped or should be helped by this product, we have a number of licensees that, for example, the CFL license, CRMLA license, and DRE license with different requirements and different expectations of how they're going to be examined. Those are the areas where I think we need to provide clarity. I think we'll get some help there with this new Office of Innovation and Consumer Protection. So I think there are a lot of benefits there as we build this, and I think with that runway to say over a 3-year period, once this gets passed, there's room to grow, to receive and continue to receive feedback from the standpoint of the DBO and continue to move opportunities forward that are going to be beneficial for the industry as a whole.
Mm-hmm. Okay, so we just got a few minutes left. I'd like to open it up to the audience and a question. Yep.
Commissioner Gill, thanks for being here today. Damien Walden from Malevolent Data Science Advisors. I don't know if you got any of the alternative data panel, but could you comment on any potential likely changes or where your direction is going in relation to the use of alternative data, new innovative credit modeling, credit decisioning, as you're looking at the next 1 to 3 years as the new departmental framework comes into being?
Yeah, it's a great question. I think it would I'm not trying to avoid the question. It might be a little premature for me to respond to it, but you also have standards that have already been set in California in regards to alternative data. And to operate in that framework, let's see here. Yeah, California Financial Information Privacy Act, which is already in existence, supporting that. And I think we have to do a little research and homework to see where the two overlap, where they meet. But I don't see a huge change right now, or at least discussions of a huge change at this point in time. Okay.
Melissa?
Can I add a follow-on question? Melissa Quiddy, FinReg Lab. This is a little bit of you trying to get outside of the existing laws and regs. We had just done some work looking at alternative data that's more financial in nature, but I think we all see right over the horizon both the potential benefits and the potential risks of looking at data that is not financial in nature. Clearly you'd want to be thinking about, a policy position around that relative to both California data privacy and also consent, I would imagine would be an important part of that. Do you have any other sort of insights about how you all might think about non-traditional data that really is sort of getting outside the bounds of what is financial in nature?
That's a tough question. Let's see if we can address it this way. From a regulator standpoint, I don't think it's in our position to step on the toes of the lenders from the standpoint of how they underwrite their credits. Personally, if you're asking me just from an opinion standpoint, I know and do believe that those are tools that are in that community that should be looked at. And they are great markers from a building of credit perspective. But until I think there's clear direction in regards to how it should be treated, I think the DBO's position will continue to be, it's not our position to step on the toes of the underwriting guide exactly. Thank you.
Anybody else? Yep.
So I wanted to get your take on that question for the last panel, which is, and by the way, you guys do have an open door policy, and I do want to say we appreciate it because we've been in there a couple of times. Sorry, Scott Brooks, Quicken Loans. It sounds like you've got a good dialogue going on with the administration about this. There is a partnership, and obviously you're not in the legislature, but I feel like you will carry a voice as this is being developed. So I'd like to get your take on the talking about innovation, and if there have been any internal discussions on a step forward from that, and not just talking about being up to date and researching financial products, but really partnering with companies in something like Arizona's FinTech Sandbox.
I think the question is in regards to, is California leaning towards a sandbox at any point in time?
If you guys have had that discussion while you're talking about this, new innovation.
Yeah, so, the commissioner and I talk every day, unless one of us is traveling. So about 2 weeks ago, we had a conversation about Arizona Sandbox, and my question to him was, Manny, do you think we are going to officially at some point in time move towards a formal sandbox? His response at the time was no. I don't see that happening at this point in time. Obviously things could or may change. I think his feeling or his response kind of entailed, look, we've had an open door policy since I've been here. We've listened to our licensees. They've had the opportunity to come in and share. If they want to request for a legal opinion from our legal department, that's been an open opportunity as well. But no official talk of going to a formal sandbox in California from what I hear. Okay.
Anyone else? Yep.
Commissioner Gill, Ellen Hardick. I'm just curious, is there, from your point of view, a gap in Consumer Protection Authority that the new legislation would fill or be helpful to you all with?
You know, in regards to a gap, I don't see necessarily a gap from a consumer protection standpoint. I see enhancements to the consumer protection by having the opportunity to regulate and license entities that are not in that capacity at this point in time. Those products, whether they be online or delivered in different ways, they're in the marketplace right now. And to have a hands-off approach is limiting our ability to protect consumers. So I think with trying to bring these things under one roof, so to speak, will give us an opportunity to enhance protection, will increase our enforcement staff quite a bit, so that we can definitely address those practices that are questionable, those things that need to be enforced or referred to enforcement. I think we're moving in that direction, but I don't necessarily see a huge gap. I just see products that are not covered. So.
Okay, well, I got one more question. Then we'll wrap it up. One thing that when I was looking at the proposal, I saw this. The thing that caught my eye was increased public outreach and education, especially for vulnerable populations. Do you have any sense of what that's going to entail?
Yeah, I want you guys to remember it's Peter's fault that we're delayed on lunch. At this point. Okay. He asked the question, but no, I think. This commissioner has been open to meet with consumer advocates on an equal basis, just as much as we meet with licensees. We meet with consumer advocates as they request those meetings. He's more than willing to take them. So from an education standpoint, we think we can play a role when there is concern or doubts about a product. And just explaining how the DBO sees and understands that product from the standpoint of regulatory oversight. I think that's a value add to consumer groups to have that access to the department. In regards to where we go further, I think the whole plan is to make sure that we have a designated area where we can address those issues. And I think the growth in the department under this proposal will give us those tools.
All right. Okay, we'll have to leave it there. Commissioner Gill, thank you very much.
Thank you, Peter.